Why remain bullish on Nvidia?
Yeah, well, I think there's a lot of reasons to still like the company. I mean, they've driven accelerated compute about 1,000x over the last 10 years, and they continue to be the leaders in the space. And AI is right now just too important of a area to let up the gas. And so I think that the large companies will still spend. I think there's a tension of like, just, what does spending more mean? And does that meet expectations? And that's what the market's really going to be focused on going forward. And so I think like there's a lot of great reasons to like the stock long term. I think that at the same time, you have to remember that semiconductors are very cyclical and they're also secular. So I think that's part of our job to navigate the environment.
So basically, brace yourself for potential short-term volatility, but longer term, you're still bullish on money coming into the likes of Nvidia. But does it broaden out? At the moment, it's felt like Nvidia is the only picks and shovels game in town. You started seeing Broadcom doing relatively well on some AI wins. What do you make of Nvidia really remaining the main place to win on AI?
Yeah, well, I think that the reason why NVIDIA has been so good in terms of it's because it's a platform, right? It's not just a chip. And so they have a big ecosystem with lots of developers writing on their code and CUDA. And so it's all built like an ecosystem platform. And so I think that's why it's such a defensible business. And, it's available everywhere. It's ubiquitous on the cloud. You can have it on-prem, and they've got great support for their chips. And so I think that's largely the reason. I think it could be changing in terms of the complexion going forward is more concentrated among the hyperscale players, and they're very sophisticated buyers of chips. They can do a lot of their own software. And so I think there will always be a balance between the hyperscale making their own chips with like significant volumes. Like you've seen Google with their TPU, that's very aimed at search. Yeah. And so I think that will continue, in other ways. And so I think they can coexist essentially.
I like that point that you've been making. And we were just hearing how DataTrek is seeing the same thing, that there is a willingness on a capital expenditure perspective coming from hyperscalers. You were in a number of those hyperscalers, Microsoft, Meta, for example, Alphabet. And Meta seemed to manage to nuance the argument of why they put money in there. Whereas Alphabet, people were worried about just spending CapEx at all costs. What do you make of the hyperscalers' decision to keep on putting money in?
Yeah, I think that Mark did a nice job of kind of illuminating why he's spending so much in AI, like with personalized chatbots and like how that can go through the platform. I think that you shouldn't count Google out at the same time. And they have a lot of AI expertise. They've been leaders in the field. They have great chips as well. And so, I think that it's too early to call who's going to be the winner or loser. They all have big platforms and user bases where they can scale their AI investments. And so, I think it's too early to call like who's going to win or lose. But at the same time, they all have really great businesses.
Barclays analysts cautioned that Nvidia's impending earnings report, which the market is anxiously awaiting, may act as a reality check for the larger market, especially in the tech sector. The bank emphasizes the importance of Nvidia's earnings, which are scheduled for release next week, in sustaining the momentum behind the AI and tech investment story that has dominated the market since late 2022 in a client research report. The first quarter of 2023 saw Nvidia post record earnings, which added to the excitement surrounding artificial intelligence, AI, which became more popular after ChatGPT was introduced in November 2022. Barclays stated that these outcomes provide verifiable proof that the AI theme might result in significant revenue increases. Since then, Nvidia's profits have continuously exceeded forecasts, propelling the IT industry and the overall market. Barclays warns that Nvidia's next report could be a letdown if it doesn't show a positive beat and increase, which could have broader market ramifications. Barclays is keeping a close eye on Federal Reserve Chair Jerome Powell's speech at Jackson Hole concurrently. The market has already priced in a dovish position from the Fed, so it is anticipated that the speech will fine-tune policy expectations. The bank observes that while the speech might not significantly change the present market picture, it might have an impact on short-term changes in rates and equity prices, given that 4 rate cuts are priced by OIS swaps before year's end. Although the Fed is moving toward easing policy, Barclays points out that current market prices already reflect a large portion of this dovish stance. Because of this, the Jackson Hole incident and Nvidia's financial results may be crucial in deciding whether the market keeps going in the same direction or needs to pause for a while. Ahead of the chipmaker's July quarter earnings report, Evercore ISI analysts recommended investors to purchase Nvidia shares, emphasizing that worries over Blackwell delays in the past are overdone. If you want to keep up with Nvidia's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
KeyBanc Capital Markets reiterating its overweight rating on Nvidia. The note highlighting the delay of the Blackwell chip will have no impact on near-term results. And joining us now is the analyst behind that note, John Vinh, equity research analyst at KeyBanc Capital Markets. John, always good to have you on the show. So Nvidia reports next week, John, and these reports we're getting of next-gen Blackwell chips getting delayed, John, that is front and center. How should investors think about that issue, John?
Yeah, I mean, a couple things that we're highlighting today is, there's going to be no near-term impact on that Blackwell delay in terms of their Q2 results and Q3 guidance. Blackwell was originally only going to start ramping maybe towards the end of the July quarter. Contributions into the October quarter were really supposed to be very modest. And what we're kind of hearing from customers is that a lot of that Blackwell backlog has largely been backfilled with additional incremental Hopper orders. As you kind of get into Q4 for these guys, we think there's going to be sequential growth and still very outsized demand for Hopper GPUs. And then you're going to start to see some contribution from Blackwell revenues in the Q4 timeframe, but that's all going to be an incremental on top of kind of their Hopper revenue base.
John, how is the Hopper supply holding up right now? Especially since if they're migrating some of what would have been Blackwell orders to Hopper orders, are they keeping up with that?
Yeah, supply is really not an issue at this point in time. I think a quarter ago, you started to see lead times for Hopper GPUs actually start to normalize. There's actually a lot more advanced packaging capacity coming online here in the second half. So supply is really no longer going to be a constraint here as we go into earnings with NVIDIA.
Let's say, John, the print comes in as you expect. I know that's a big if, but let's say that happens. On the call, John, what would be your big questions for Jensen Huang?
I think the big question is, how is Blackwell doing, right? What's your expectations in terms of the timing of the ramp? And, I think I heard your last call about, cadence and customers moving to system level solutions. The big thing with NVIDIA with Blackwell is they are moving to a system level, rack level scale architecture with GB200. That's the big question mark. The concerns there is that going to be able to ramp on time and ramp in meaningful volumes for next year? Those would be the key questions that I would want to ask.
The investment bank highlights a 20% quarter-over-quarter increase in hyperscale capital spending in Q2 2024 as evidence of the continued strength of demand for NVIDIA systems. It is anticipated that CapEx will increase by an additional 8% and 10% in Q3 and Q4, respectively. According to rumors that surfaced earlier this month, NVIDIA's highly anticipated Blackwell system, which features its next-generation AI chips, might experience a 3-month delay. The disclosure sparked a recent sell-off in NVIDIA's shares because it made investors question whether the company's upward trajectory could continue. Upon reviewing the 3 prior NVIDIA product disruptions in 2008, 2022, and 2023, Evercore analysts draw the following conclusions. Although a negative announcement might cause a short-term 5%-10% decline in the company's stock, NVIDIA has a history of quickly developing alternative solutions. Additionally, in the event that a delay materializes, we think demand is so strong, even at Tier 2 and Tier 3 cloud service providers and enterprises, that even with Blackwell's push, current generation Hopper solutions would be purchased. Furthermore, they note that NVIDIA's stock has recently seen 2 notable corrections totaling more than 50%, one in the second half of 2018, which happened a quarter ahead of peak capital expenditure and at a price-to-earnings (P/E) ratio of 38. the other in 2021 to 2022, which happened 4 quarters ahead of peak capex and started at a P/E of 67. Given that peak capex is expected to occur in the 4th quarter of 2025, and that Nvidia's current P/E ratio is 39, analysts do not expect a substantial stock sell-off before mid-2025. All things considered, the Evercore team still regards Nvidia as its top tectonic shift in computing pick, one that is poised to reap up to 80% of the benefits of the parallel processing age. According to analysts, the darling of artificial intelligence, AI, might earn more than $10 in earnings per share, EPS, by 2030 and eventually rise to 10 to 15% of the S&P 500 index's weight. In the short run, Evercore increases its projections for Nvidia's 3rd quarter and 2024 and lifts its target price from $145 to $150. So what does this really mean for Nvidia's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
You've been great at articulating why you believe AI is such a winning story, but juxtapose that with the overall macro picture here. We see the market get hit on the fact of whether or not we will have interest rate cuts. How much do you factor that in the here and now when you're looking at a portfolio allocation?
Yeah, I mean, it's definitely an area that you can't ignore. The macro is super important. You have to be aware of like what's going on top down. At the same time, I think that we kind of take it stock by stock and look at where expectations are, like the likelihood that they beat expectations, how well the company is positioned. So no matter even like what direction the macro is going, like you should be able to like create alpha either way, just by relative selection of stocks. And so, when I think about kind of Nvidia, like a lot of it, it's going to be a really big print here. Like we've never had this amount of debate, I think, in terms of, are we kind of near the cyclical peak or is it going to continue? And so, we do a lot of fundamental work to understand like kind of where the products are positioned and how to think about the setup of the stock.
Look, when you're managing the Science and Technology Fund, does it suddenly amaze you that the whole world now thinks Nvidia is a macro moment? Its earnings might dictate the rest of the benchmarks.
Yeah, it's a phenomenal moment. I mean, if you think about it, the stock has just been amazing. I remember I started covering it about 7-8 years ago, and you would never have thought it would be $3 trillion. So everybody has like underestimated the company, through like multiple cycles. And so it's been, phenomenal. It's because, they offer so much value. And like we've seen this like kind of AI vision of accelerated compute play out. And so I think everyone now recognizes it. And so, it is pretty phenomenal. And I think that part of the reason why Nvidia is so important is because there are a lot of AI multipliers through the economy, and there's a lot of market cap creation because Nvidia is doing well. And there is this like kind of idea that long-term value creation, productivity driving through the economy. So I think it's a big moment for the market for sure. And so we're excited to see what happens next.
The stock price of Nvidia could move in one of 2 ways following its results release: enormous profits or losses. That may sound completely ridiculous and apparent, but that's what the most popular stock in the investing world is up against when it trades on a market capitalization of almost $3 trillion. The founder of ENG Capital, Eric Jackson, predicted that investors may experience a seismic shift following Nvidia's earnings release. Between now and the end of the year, Nvidia's valuation might treble again, according to Jackson. But CEO Jensen Huang will need to allay worries on 2 fronts if he wants Nvidia's stock price to rise in response to earnings, as Jackson believes. He has to first give the impression that the rumored holdups with his new Blackwell AI chip are only brief. Second, there is still a high need for AI chips. If he succeeds in doing all of that, Nvidia's market capitalization might reach $4 trillion. There is no doubt about that. During the AI boom, Nvidia has been the most closely followed stock. It's understandable why. Since the beginning of 2023, Nvidia has increased its market worth by over $2 trillion, placing it in an elite group of highly valuable corporations that is only surpassed by Apple and Microsoft. But in addition to the business's accomplishments in spearheading the revolution in AI chips, it also has a modest investment portfolio. But a powerful business like Nvidia might make a big difference with its stock acquisitions. ARM Holdings, a company specializing in CPU architecture, with whom Nvidia collaborates closely, is its largest holding. The news of its acquisition of SoundHound AI shares in the first quarter caused the stock's value to soar. During the second quarter, Nvidia purchased a single shares in Serve Robotics, a company that creates robots that distribute food in public areas. When word leaked that Nvidia had bought 3.7 million shares in the second quarter, which is now worth around $4.3 million, or 10% of the company's market value, the stock shot up 9.6% during heavy volume trading. Founded in 2021, Serve Robotics is a small AI and robotics startup that employed just 67 people at the end of 2023. Prior to joining Uber as CEO, Adli Kashani served as Vice President of Postmates, an on-demand meal delivery service. Before that, he was the Chief Technology Officer and co-founder of a smart home technology that Generac, a generator manufacturer, purchased. Serve Robotics offers autonomous delivery cars that you may have seen on the street. Eats and Uber Eats teamed up to test robot delivery in Los Angeles. Yum! Brands Pizza Hut, Shake Shack, and 7-Eleven are among Serve's customers. Uber is not just a significant client, but also an investor in the business. As of right now, Serve Robotics is essentially simply a startup. Revenue for the second quarter was $468,375, but that was 655% more than it was for the same period last year. The average number of robots making daily deliveries was 48 daily active robots for the company in the second quarter of this year, which was more than twice as many as there were in the corresponding period of the previous year, 23. By the end of the first quarter of the following year, it hopes to have deployed at least 250 more robots in Los Angeles. By the end of 2025, it also plans to have 2,000 robots working for Uber Eats, which it estimates will bring in $60 million to $80 million a year. The field of robotics, which includes delivery robots, is new. Given that there would be no need for human labor in the current food delivery system, if a firm such as Uber to develop robotic meal delivery, the addressable market appears to be huge. It's also a testament to the company that Nvidia, the premier chipmaker and ride-sharing platform, and Uber are investors. These connections should give the company an edge over other robots companies. Possibly, it will allow for additional partnerships with Uber and grant Serve first dibs on Nvidia chips and technology. Serve Robotics has a great deal of upside potential because of those ties and its leadership position in a developing technology.